The US dollar index continued its bullish run today, reaching a 3-week high, and this rally follows Friday's 0.8% surge, driven by impressive US jobs data. As a result, markets have adjusted their forecast and are now anticipating only one rate cut from the Fed Reserve by the year's end. In Europe, political instability intensified after far-right political parties made significant gains in the European Parliament elections. Against this background, demand for the dollar as a safe haven asset increased, putting pressure on the Euro-USD pair. In Asia, the dollar hit a 1-week high against the yen. Now let's take a look at the key reports that will be in the focus of the market participants tomorrow, June 12th. You're watching Traders Calendar. Analyzing global economic trends, let's turn our attention to China, where the annual inflation rate jumped to 0.3% in April 2024. Exceeding both forecast and the March figure of 0.1%. This increase was driven by a rise in domestic demand despite a fragile economic revival. In particular, non-food inflation accelerated, with the prices for clothing and healthcare rising. At the same time, food prices fell for the 10th consecutive month. The inflation rate in Germany is expected to be 2.4% in May 2024, up 0.2% from the previous reading. Core inflation, which excludes food and energy, is estimated to have held steady at 3%. If the real figures are in line with the forecast, it will mark the first increase in the last 5 months, primarily driven by the rising costs of services and food products. In such a scenario, the euro could gain value against other currencies. UK GDP growth data is also due out on Wednesday. Britain's economy grew by 0.4% in March, the fastest pace in the 9 months, and well above analyst estimates. The growth reflected strengths in the services and the manufacturing sectors. However, forecast for April suggests a decline to 0.1%, which could drag the pound sterling down. The British currency may also come under pressure from data on industrial production levels, which are estimated to have fallen by 0.1% following a rise of 0.2% a month ago. The most crucial reports on Wednesday's economic calendar will undoubtedly come from the United States. At the start of the American trading session, it's worth focusing on inflation data. The annual inflation rate is forecast to come in at 3.4%, the same as in April. Meanwhile, core inflation, a gauge closely watched by the Fed Reserve, is expected to slow to 3.6%. The inflation report is particularly important as the Fed Reserve will announce its interest rate decision later in the day. The regulator is widely expected to leave its key interest rate unchanged at 5.5%. Fed policymakers still expect inflation to return to the 2% target, as confirmed by the minutes from the latest policy meeting on May 1st. This scenario would help the dollar hold steady. However, subsequent comments by Fed Chairman Jerome Powell at a press conference could lead to a shift in the market sentiment. If the tone is hawkish, the dollar is likely to respond with increased volatility, if not outright gains. We will monitor the market reaction to the above-mentioned reports. Subscribe to our channel and follow changes in market sentiment with us. Any comments, questions and offers are welcomed. We wish you profitable trading and see you soon.